Ivan Genov, and I'm Manager of Tobacco Industry Analysis at the International Tobacco Growers Association. It is a great pleasure to be able to present the global market overview for your event. And without further ado, I will focus on today's presentation, which will look at the industry from several different perspectives. I will include a production outlook with the main threats and opportunities for growers, the latest data regarding the main leaf varieties, a brief discussion on China, and some key FCV markets. Then we'll follow with a regulatory outlook with information about the incoming COP10, the US Food and Drug Administration latest initiatives, and EU-level developments. I will also cover next generation regulations that are likely to come in force in the immediate future. Finally, there will be a consumption outlook with the latest cigarettes volume sales, next generation products, and cannabis opportunities. The fourth section will be company performance, and I will give you a brief overview of the latest developments of the main manufacturers and leaf dealers. And finally, I will finish with some details about ITGA resources available to our members. Starting with the sector's fundament, the tobacco leaf and the tobacco grower, I would like to share with you some information and insights based on our meetings with growers around the world during 2022, when we returned to meetings in person after the global pandemic. Last year, we were able to conduct regional meetings in Africa, the Americas region. We did a tour in the Oriental Tobacco region and also held our annual general meeting in Portugal. So we were able to gather a lot of information, which is presented on this slide as the main threats and opportunities. And I will speak a little more in detail about the key things that we identified. Cost of production is arguably the thing that was most frequently mentioned by our members, and with the interaction we had with growers around the world. Quite literally, in each case, in each of the key tobacco producing countries, this is one of the major problems. In Brazil, costs of production have grown 30% on an annual basis. In Zimbabwe, this growth is 20%, and in most of the leading tobacco producing and exporting markets, cost of production is at least is growing with double-digit figures for the last year. There is growing political and economic pressure. The war in Ukraine, for example, among other complications, has led to issues with fertilizers, fertilizer availability and pricing. We have worsening of the US-China relations, which could pose further restrictions and additional steps in the logistics business. We have inflation pressures in developing and developed markets, and a general expectation of a prolonged period of crisis. The general consensus is also that growth in the world consumption of cigarettes has peaked and is now declining, which goes in line with a similar trend for tobacco leaf in the long term. Moving to next generation products, one of the leading categories, heated tobacco uses tobacco leaf, but at lower per stick equivalent, while other categories such e-vapor do not use tobacco at all. And there are growing regulatory burdens coming from all sides, with supply chain due diligence and more requirements in each step of the production process. Nevertheless, there are also opportunities, at least since late 2020, we're in a state of more leaf usage than production. Burley tobacco has been particularly short in Africa, in part due to weather conditions. One of the leading producers of burley, Malawi, had a very short crop last year, and all of this is openly discussed by the main leaf merchants and manufacturers. At the same time, key markets have proven to be more robust than expected. This is from a consumption side. In 2021, for example, the cigarette industry bounced back from the historic lows of 2020, and this was its strongest performance in a decade. And all these factors, of course, paint a complicated overall picture, but having in mind some of the new realities, we could firmly say that stable producers who are well prepared for the underlying threats will be faced with demand for their production. Here we see the 4 biggest tobacco types and their recent production progression on global level. These are the latest global aggregates, excluding China, as provided by Universal Leaf at the 8th of February. For flue-cured Virginia, 2021 marked a slight rebound in production after a short drop in 2020. This was largely driven by increases in the US, Brazil, and Zimbabwe, coupled with good weather conditions and revival of trade in key markets after the initial waves of COVID-19. In 2022, the global FCV crop, excluding China, was again short. For example, in one of the biggest producing countries for FCV, Brazil, the season concluded with 60 million kilogram less than the year before. Projections for 2023 currently suggest that leading markets, including Brazil, will increase production, which could lead to increased supply on global level. For Burley and Oriental, the trajectories are downwards for the last 3, 4 to 5 years. For next year, Universal Leaf expects significant production growth for Burley in Africa, but whether this forecast materializes remains uncertain. Finally, dark hair cured tobacco is stable at around 110 million kilograms at global level. We saw on the last slide, information about the world without China. Here we focus on China only. We have to admit that information sharing and information we get from China is quite low at the moment. It is very restrictive of what goes out of the country, but we can see that domestic production is growing exponentially. From our conversations with growers, we know that Chinese buyers have very specific requirements for the desired tobacco leaf varieties. On the right side, you see the latest import statistics as released by UN Comtrade. The COVID-related drop in 2020 was overcome with the opening up of borders, and it is highly likely that demand will remain strong based on local consumption patterns. Focusing on some of the leading FCV markets here, Brazil, Zimbabwe, and United States, I will speak a little bit about what is happening in production and average prices. In Brazil, in 2022, a total of 513 million kilograms were produced, a decrease of 10.5% on a yearly basis. Drops were registered in all three main South Brazil regions, Rio Grande do Sul, Santa Catarina, and Paraná. We just finished trip to Brazil, where we have a very strong member organization, FUBRA, which is taking a very active part in organizing the local sector. So we have the latest production estimate for 2023, which stands for around 550 million kilograms. So there is likely to be a significant increase of production in the next season. However, as I already mentioned, cost of production is a big issue, nearly 30% for FCV, but pricing has also improved significantly. In Zimbabwe, production fell by 3% last year to just over 200 million kilograms. This was in fact higher than anticipated due to drought and the late rains improving the late crop. Cost of production increases in cost of production are higher than the increase in price. Expectations next year are for another sharp increase in cost of production. Our local association reports that over the last 2 seasons, farmers' viability has been significantly reduced, and going into the future, pricing will remain a crucial element in seeing which farmers stick with tobacco and which move entirely to other crops. It is interesting to note here that local government has an ambitious target to stimulate production of 300 million kilograms by 2025. But given the current progress of the market, this seems highly unlikely. I will not go into lengthy detail about the United States because I'm sure your comprehension of the market is more detailed than ours, but I'll just highlight what are the key messages that we received from our member associations. We see that cost of production are putting a severe pressure on growers who increasingly find other commodities much better in the short, mid, and long term. Labor, energy, and fertilizers were flagged as particularly problematic, and 2022 is said to be the most expensive crop to be grown in history. For 2023, US growers expect increase in demand with no relief in cost of production, and it appears that China is back on the market. The next section of the presentation will focus on regulations. I will start with the FCTC COP meetings. This is an international health treaty comprised of 38 articles and with over 180 parties. These articles aim to reduce the use of tobacco products through supply chain reduction measures and demand reduction measures, with the exception of 2 articles, which are a provision of support for economically viable alternative activities and protection of the environment and the health of persons. The last meeting, which was held in 2021, was held online due to the COVID pandemic. Discussions and decisions on substantive issues were postponed to COP10, which would take place in Panama in November 2023. During COP10, measures beyond those required by the convention are likely to be discussed. Another issue on the cards is the accountability of the tobacco industry, which may include leaf production. There will be discussions about tobacco advertising, promotion, and sponsorship, depiction of tobacco in entertainment media, promotion of FCTC through human rights possible amendments of the rules of procedures to cope, novel products regulations, and environmental matters, in particular related to climate change. All this is, of course, important, but is likely to lead to increased cost of production due to societal and environmental requirements and potential accountability as part of the supply chain of manufacturers. What is a conclusion of this is that FCTC and COP will continue to drive national, regional legislation with regard to tobacco and tobacco products, and we have to monitor these developments tightly. There is also several regions in the world which adopt strict set of requirements that have the potential to affect regulators in neighboring markets. In the United States, for example, the local Food and Drug Administration was scheduled to publish the final rule prohibiting the sale of tobacco products to people younger than 21 years of age. There is a final rule on banning menthol in cigarettes, roll your own and heat not burn products. There is also a final rule on prohibiting all characterizing flavors, including menthol in mass-marketed and premium cigars. And also there are discussions about reducing the level of nicotine in cigarettes, which seems to be popular among the general public, but is likely to significantly alter the composition of the market if and when adopted. On the other hand, we have the European Union, where the Tobacco Products Directive guides the overall rules that apply to different tobacco categories. There is scheduled amendment proposal that is likely to come in 2024, which is likely to expand labeling and plain packaging requirements to next generation products like heated tobacco, banning the sale of heated tobacco with characterizing flavors, and other considerations. There is also a larger initiative that is named Europe's Beating Cancer Plan, which is a 4 billion euro initiative, and it's aimed at creating a tobacco-free generation, which means less than 5% of the population uses tobacco by 2040, compared to around 25% today. And of course, this is interlinked with Tobacco Products Directive, the Tobacco Taxation Directive, the Cross-Border Purchasing Rules, and the WHO FCTC. The EU Single Plastics Directive is the main threat to single-use cigarette filters that are expected to be subject to an extended producer responsibility scheme, which makes manufacturers financially responsible when butts are thrown away. And there are already entities in a few markets, including France, that will take care of cleaning up this litter, but the industry will finance the initiative. And then we have next generation regulations, which at the moment are implemented in only short, in a small limited amount of countries, but they have the potential to expand to a lot more in the long term. For example, the birth year ban was considered a soft prohibition advocated by some anti-smoking groups in countries such as Australia, but not supported by any government. However, in New Zealand, There is a plan already in place to phase out smoking by gradually raising the legal age to purchase cigarettes. A similar measure is reportedly also seriously considered in Singapore, Denmark, and Malaysia. And for example, what this means in the context in New Zealand is that people born after a certain age, I believe in New Zealand, the discussion is about setting the limit at 2009. So people born before 2009 will never be, after 2009, excuse me, will never be able to legally purchase tobacco products. We also have plain packaging, which was one of the greatest threats to the industry, and is expanded globally thanks to the support of the WHO. At the beginning, it was seen as a very extreme measure, but it's now implemented in at least 15 to 20 markets, which represent over 300 billion sticks. These countries include Australia, France, the UK, Thailand, Turkey, Hungary. So a very large set of markets that have little in common have gone for this extreme approach. And we have other types of regulations, such as on-stick messaging, that are likely to be increasingly visible in the coming years. Now I will focus the attention on the consumption side of the business with data that is provided by our partner Euromonitor International. Here on this slide, you can see the composition of the global cigarette sales grouped by regions. The blue bar is 2016 and the orange bar is 2021. So in virtually all markets, except for China and the Middle East and Africa, cigarette volume sales have declined, in some cases significantly. The only countries that are likely to see volume growth are located in the Middle East and Africa, and in the immediate future, the established, most profitable markets are likely to account mainly on value for their profits rather than volume. In terms of next generation products, here on the slide you can see the main manufacturers' portfolios in the most established categories. So heated tobacco, the biggest one so far, e-vapor products and nicotine pouches, all of them have tied their future strategies to a certain degree, and I will go in more details in the slides to come about the details of each of them, but all of them are essentially looking into these categories for growth. Heated tobacco is arguably establishing itself as the most important category, with PMI's IQOS being the biggest, the most dominant product in this category, while e-vapor may remain a geographically diverse category and may continue to have a greater number of users overall, but heated tobacco ceiling seems to be much higher if it could achieve traction in major markets such as the United States, Indonesia, and China. On the right-hand side here, you can see the potential of different categories. Of course, they start from a different base. Nicotine pouches start from a much smaller base, so their growth is likely to be higher, but literally all of these categories are going to see growth into the next 4 to 5 years. And if we have to summarize how the industry looks from the outside the nicotine universe, this is the global value composition. So cigarettes remain by far the biggest category, taking more than 80% of all sales in value terms. And we have other categories, traditional smokable categories like cigars and cigarillos and smoking tobacco, but the share of alternative products such as heated tobacco, e-vapor, and tobacco-free oral nicotine is growing. And although the share of these categories is quite limited at the moment, they will grow in importance going into the future. Talking about opportunities, we have also the latest data regarding cannabis. At the moment, this is seen by the leading experts in the field as a major opportunity that could approach $100 billion in the next few years. Euromonitor International see this category comprising of 3 distinct categories: medical cannabis, adult use, or recreational cannabis, and CBD. At the moment, United States dominates the emerging legal cannabis industry. However, the illicit markets is thought to be around 3 to 5 times bigger, which indicates the possible full size of the opportunity. Medical sales are likely to pick up in Europe and Latin America, while CBD requires more regulatory clarity before companies commit to it. Even though it's an opportunity for some, cannabis is seen as a substitute to traditional products like cigarettes in few markets. But at the same time, the leading manufacturers like PMI, BAT, Imperial Brands, and Altria are already involved in this emerging category through major investments. And here we also need to mention that the regulatory framework is of vital importance because we are aware of the significant overproduction in the United States in the previous years when the opportunity was emerging. So following and establishing a firm regulation framework is seen as very important for the future prospects of the industry. And now turning our attention to company performance. On these slides, I have taken a snapshot of the latest annual half-year reports of Philip Morris, BAT, JTI, and Imperial Brands. And before I go into detail about each of them, I have to mention that all of them have significant exposure to their cigarette portfolios to Russia, a market that most have committed to exit in one way or another in the future. This exposure is between 10 to 20% of volume sales. So a lot of these companies are reporting in adjusted terms to reflect this big disruption, but nevertheless, it remains very important for their financial bottom lines. And what is also a trend for most of them is the focus on sustainability. All the companies have released multiple reports and assessments. This is valid for the merchants as well, and we should keep an eye on them to find opportunities for our growers. For PMI, 1/3 of the total net revenues are coming from smoke-free products, even though you see that in volume terms, the share is much lower. The company wants to have at least half of its revenue by such products by 2025. PMI recently acquired Swedish Match, which is the leader in oral tobacco. Going back to what was discussed in the previous slides about oral nicotine, this puts them in a prime position to be a leader in this emerging category as well. The company extended its agreement with KT&G, the South Korean manufacturer, for the commercialization of their products to 2038. And also the company regained full control of IQOS in the US in an anticipation of future national rollout. For BAT, around 10.5% of the total revenues are coming from alternative products. The company is focused on different categories, while PMI at the moment, or at least until the end of last year, was almost entirely focused on heated tobacco. BAT at a lower scale is focused on heated tobacco, on e-vapor and nicotine pouches to various degrees, but the company is also going through a big transformation, which is affecting its focus. So we will see in the next 1 to 2 years where their resources will be allocated to for future growth. In JTI, they are focused on heated tobacco expansion out of Japan, even though the company, of course, is all the others, is also investing and invested heavily in their combustible portfolios. But it's important to also notice that they have recently built a joint venture with Altria in the US for the possible commercialization of heated tobacco sticks. So it seems that big companies are preparing for the heated tobacco opportunity in the United States. And finally, Imperial Brands is the company is smaller compared to its other 3 peers, and it is also going through a bigger transformation than BAT. It's a 5-year transformation where the company tries to focus on where it has a good market share, and one of these focuses is heated tobacco in Europe. Moving our attention to the leading leaf merchants, their sales in the last year, in 2022, went up quite significantly, and so did their operating incomes. Universal have reported the reduction of supply chain complexities and increased demand and normalized timing of shipments from Africa, Asia, and South America. Pixus, or Alliance One, has reported shipments from Brazil up significantly, volume up in Africa, and lower sales in the Oriental region. And finally, I would like to share you an updated information about ITGA and our resources for member associations. I mentioned in the beginning of the presentation the regional meetings that we had and the annual general meeting that we conducted during 2022. Here you can see photos from these events. It is arguably, it is definitely the biggest asset of ITGA, the rich network that we have, and the meetings that we are able to conduct, the information that is shared during these events. For 2023, we already have a very packed schedule. covering all the major regions. At the moment, we are in the middle of our Americas meeting in Salta, Argentina, where representatives from Argentina, Brazil, Dominican Republic, Colombia, and the United States are sharing information and discussing the key issues for the sector. So this is, of course, a great focus for us. We also have a huge database of important information. The Tobacco Atlas has the main figures for the main markets on our website. We also produce a monthly newsletter for our members that covers crop updates, regulatory developments, industry updates, and sustainability initiatives. We also publish a magazine, the Tobacco Courier, twice a year that focuses on a particular topic and also has the latest production information from most markets that we cover. We are also very active in social media, where we have a growing following, particularly on Twitter, where we share a lot of information and data, and of course on LinkedIn. With this, our presentation concludes. It was a great pleasure for me to be able to share with you all of this. If you have any questions, we are more than happy to answer them. So please submit them after you hear this recording in writing, and we will get back to you as soon as possible. I wish a successful annual meeting, and hopefully we can see each other in person in the future. Thank you.